Welcome to Financial Freedom Channel. Eligibility requirements for opening an HSA. Before diving into the world of health savings accounts, HSAs, it's crucial to understand the eligibility requirements for opening one. HSAs are designed to provide individuals with a tax-advantaged way to save for medical expenses, but not everyone is eligible to open an HSA. To qualify for an HSA, you must meet specific criteria. First and foremost, you must be enrolled in a high-deductible health plan, HDHP. An HDHP is a health insurance plan that comes with a higher deductible than traditional plans. In 2021, the minimum deductible for an individual HDHP is $1,400, while for a family HDHP, it's $2,800. Furthermore, to be eligible for an HSA, you cannot be covered by any other non-HDHP health insurance plan, including Medicare. However, you may still qualify for an HSA if you have additional coverage limited to dental, vision, specific illnesses, accidents, or disability. Another important requirement is that you cannot be claimed as a dependent on someone else's tax return. HSAs are designed for individuals who have control over their healthcare decisions and financial responsibilities. It's worth noting that age is not a factor when it comes to HSA eligibility. Whether you're in your 20s or nearing retirement, as long as you meet the aforementioned requirements, you can open and contribute to an HSA. Understanding the eligibility requirements for opening an HSA is essential in determining if this healthcare savings tool is right for you. Before making any decisions, ensure that you meet the criteria and consult with a financial advisor or tax professional for personalized guidance. How to set up and fund your HSA. Setting up and funding your health savings account, HSA, is a crucial step to unlocking its benefits. It may seem daunting at first, but with the right guidance, it can be a straightforward process. To begin, you'll need to choose a financial institution that offers HSAs. This can be a bank, credit union, or an online HSA provider. Research different options and compare their fees, investment options, and customer service to find the one that suits your needs best. Once you've selected a provider, you'll need to complete the necessary paperwork to open your HSA. This typically includes filling out an application form and providing identification documents. Some providers may require a minimum initial deposit, so be prepared to fund your account accordingly. Funding your HSA is a crucial step to ensure you have the necessary funds to cover your healthcare expenses. There are multiple ways to contribute to your HSA. 1. Payroll deductions. If your employer offers a high-deductible health plan, HDHP, paired with an HSA, you can elect to have a portion of your salary deducted pre-tax and deposited directly into your HSA. This provides a convenient and tax-efficient way to fund your account regularly. 2. Direct contributions. You can make contributions to your HSA directly from your personal funds. These contributions are tax-deductible, meaning they can reduce your taxable income for the year. Be sure to consult the current IRS guidelines on contribution limits to ensure you stay within the allowable limits. 3. Employer contributions. Some employers may contribute to their employees' HSAs as part of their benefits package. This can be a valuable perk that boosts your HSA balance without any additional effort on your part. Check with your employer to see if they offer this benefit. 4. Rollovers and transfers. If you have an existing HSA from a previous employer or a different financial institution, you can roll over or transfer those funds into your new HSA. This allows you to consolidate your HSA balances and manage them more effectively. Remember, it's important to track your HSA contributions to ensure you don't exceed the annual contribution limits set by the IRS. Additionally, keep all documentation related to your HSA contributions for tax purposes. By following these steps, you can successfully set up and fund your HSA, paving the way to reap the numerous benefits it offers. With a well-funded HSA, you'll have peace of mind knowing that you're prepared to tackle your healthcare expenses while enjoying the tax advantages that come with it. Understanding contribution limits and tax advantages. Understanding the contribution limits and tax advantages of health savings accounts, HSAs, is crucial for maximizing the benefits they offer. HSAs are a tax-advantaged savings vehicle designed to help individuals and families with high-deductible health plans, HDHPs, save for medical expenses. One of the key advantages of HSAs is the ability to contribute pre-tax money. Contributions made to an HSA are tax-deductible, which means they reduce your taxable income for the year. This provides an immediate tax benefit and can lower your overall tax liability. Additionally, any interest or investment earnings on the HSA funds are tax-free, allowing your savings to grow over time without incurring additional taxes. However, it's important to note that there are annual contribution limits imposed by the IRS. For the year 2021, the contribution limit for individuals with self-only coverage is $3,600, while the limit for those with family coverage is $7,200. Individuals who are 55 or older can make an additional catch-up contribution of $1,000. By understanding these contribution limits, you can strategically plan your contributions to maximize the tax advantages of your HSA. It's important to note that contributions can be made throughout the year, and any unused funds can roll over from year to year, allowing you to build a substantial savings for future medical expenses. In addition to the tax advantages, HSAs also provide flexibility in how the funds can be used. Qualified medical expenses, such as doctor visits, prescriptions, and hospital stays, can be paid for using HSA funds. However, HSAs also offer the flexibility to use the funds for non-medical expenses in retirement. Once you turn 65, you can withdraw funds from your HSA for any purpose without incurring a penalty, although you will still owe income tax on the withdrawal if it is not used for qualified medical expenses. Understanding the contribution limits and tax advantages of HSAs is crucial for making the most of this valuable savings tool. By strategically contributing to your HSA and taking advantage of the tax benefits, you can unlock the full potential of your HSA and enjoy the financial security and flexibility it provides for your healthcare needs. Using funds from your HSA for qualified medical expenses. One of the major benefits of having a health savings account, HSA, is the ability to use the funds for qualified medical expenses. This feature allows you to have greater control over your healthcare expenses and can provide significant financial relief. Qualified medical expenses that can be covered by HSA funds include a wide range of healthcare services and products. This includes expenses such as doctor visits, prescription medications, dental and vision care, medical equipment, and even certain alternative therapies like acupuncture or chiropractic treatments. In fact, the IRS provides a comprehensive list of eligible medical expenses that can be reimbursed from your HSA. To use your HSA funds for qualified medical expenses, you can simply pay for the expenses directly using your HSA debit card or checks, if provided by your HSA provider. Alternatively, you can pay out of pocket and then reimburse yourself from your HSA later. It's important to keep track of your expenses and retain all receipts and documentation for tax purposes. One crucial aspect to note is that it's essential to ensure that the expenses you are using your HSA funds for are indeed qualified medical expenses. Using HSA funds for non-qualified expenses may result in penalties and tax implications. Therefore, it's always advisable to consult with a tax professional or refer to IRS guidelines to ensure compliance. By leveraging the power of your HSA to cover qualified medical expenses, you can not only save money on taxes but also take control of your healthcare expenses. This financial flexibility and peace of mind are just a few of the many benefits that make HSAs a valuable tool for individuals and families seeking to unlock cost-effective healthcare solutions. Don't forget to subscribe to my channel, like my video and turn on the notification button for more video.